Guys, there is a big pilot going on that might actually extend crypto's utility to trillions of dollars. It's not industrial utility, it is a financial market utility. Has to do with the derivatives market, which is very, very big. And they're running a pilot right now on this, so they are serious about this. What is it? Well, they are looking to allow crypto in use as collateral for derivatives. Not all of crypto, just Bitcoin, Ether, and USDC. To be expected. USDC obviously is most likely going to pass because it's just US dollars. And of course, US dollars are the primary collateral used for derivatives right now. But Bitcoin and Ether, that could really boost up the utility and use case of Bitcoin and Ether, because right now Bitcoin's not really used for anything besides like store of value. And Ethereum right now, besides its own ecosystem, doesn't really have any use either, but this could impart trillions of dollars of value. Before we explore this, let's see how big the derivatives market is. The derivatives market is enormous, with recent estimates for over-the-counter derivatives hovering around 600 to 700 trillion in notional value, primarily driven by interest rate and foreign exchange rates. But of course, that's not the entire story. There's not actually 6 to 700 trillion dollars of actual value in the underlying assets. The underlying asset is actually much smaller, around 17 to 20 trillion dollars. And I do actually believe that's the amount, 17 to 20 trillion, which is still a lot, still several times the entire crypto market's market cap. 17 to 20 million, that's what will be allowed to actually be collateralized. Now, if Bitcoin and Ethereum is used to collateralize only a small part of that, that could definitely send their value soaring. Now, of that 17 and 20 trillion, I'm only predicting a very small amount of that, but even if it's 1 trillion out of 17 to 20, that would boost up the actual demand for Bitcoin to use as collateral, remove that off exchanges in the markets, and then of course shift the supply demand kind of like balance into demand's way and have much, much higher prices. So its size is staggering, often compared to many times the world's GDP. That's the 6 to 700 trillion. But like I said, 17 to 20 trillion is, I think, the amount that actually needs to be collateralized. Let's see what can be used as collateral right now. In derivatives markets, collateral typically includes highly liquid assets like cash and government bonds, but can also extend to other securities, while the CFTC is now piloting the use of Bitcoin, Ether, and USDC stablecoins as acceptable collateral alongside tokenized treasuries and money market funds. So generally very liquid and not very risky assets. Now, obviously, if you're going to collateralize it with Bitcoin, Ethereum, USDC is just dollars, so it doesn't really matter. But Bitcoin and Ethereum, you're going to have to over-collateralize because the price of Bitcoin or Ethereum can actually go down. So they might demand 150, 170% collateral. That's nothing unusual, especially for those of you that are familiar with like crypto loaning and borrowing. But this could have a very, very huge effect on the markets. So the US CFTC is issuing updated guidance for a tokenized collateral in derivatives markets, paving the way for a pilot program to test how cryptocurrencies can be used as collateral in derivatives markets. Collateral in derivatives markets serves as a security deposit, acting as a guarantee to ensure that a trader can cover any potential losses. Basically, yeah, it's basically you deposit a lot of money into an account. When you do derivatives and you lose a lot of money, they actually take it out of that account, and they won't really let you trade unless you have that collateral. Now, if you only have a bunch of Bitcoin right now or Ethereum right now, you don't have any cash, you might have to liquidate that Bitcoin or Ethereum, which would result in a lot of potential losses right now. But soon, that might not have to happen. And obviously, if you can use those things as collateral, things that can't be used as collateral, maybe like stocks or something, could actually be turned into Bitcoin and Ethereum for that use. So there is a very, very huge opportunity there. Obviously, there's going to be more trading markets created from this. The digital asset pilot, announced by CFTC acting chairman Carolyn Pham on Monday, will allow Futures Commission Merchants, FCM, a company that facilitates futures trades for clients, to accept Bitcoin, Ether, and Circle stablecoin USDC for margin collateral. The CFTC pilot is another step toward integrating crypto into regulated markets, and Circle CEO Heath Tibert said it will also protect customers, reduce settlement frictions, and assist with risk reduction. Now, I guess a lot of the crypto market will actually be USDC, but I think there are some people that do want to use Bitcoin and Ethereum because they want to make money while they are using it as collateral. Like I said, if only a very, very small part of that 17 to 20 trillion actually becomes Bitcoin or Ethereum collateral, that could boost the market way, way up. Remember, a trillion is 1,000 billion. A billion is 1,000 million. So a trillion is basically a million. That's what a trillion is. We can just get like $50 billion out of that 17, 20 trillion dollars. We're good to go, and we would actually shoot up by a lot. Remember, the ratio of actual money entering the market to the amount market cap rises is pretty low. I mean, it's pretty high. It's like, 20 to 1, 50 to 1. So even 500 billion or like even 100 billion into the crypto market would actually move it up a lot. Just for reference, MicroStrategy, despite all its buying of Bitcoin, still owns less than 100 billion worth of Bitcoin. And we know that if MicroStrategy just basically completely sold out, it would drag Bitcoin into the abyss, probably under $20,000. So you can imagine what $100 billion of buys, even if it's like layered over time, could possibly do. So that is extremely huge for the crypto industry and the crypto markets. Right now they're updating CFTC guidance for tokenized assets. The guidance covers real-world assets, including U.S. Treasuries, money market funds, and topics such as eligible tokenized assets, legal enforceability, segregation, and control arrangements. FAM said in an X post on Monday that the guidance provides regulatory clarity and opens the door for more digital assets to be added as collateral by exchanges and brokers in addition to U.S. Treasuries and money market funds. So no, it's not industrial utility. They're not using it to like transfer money. They are not using it to like process anything, but you can actually use it you might be able to use it soon, at least Bitcoin and Ethereum, as collateral to crypto markets, and that could really, really boost us up. Now, once again, I believe most of the crypto usage will actually be via USDC via this, but only a small amount for Bitcoin and Ethereum could really turn the markets up, and it could actually be the bull run trigger that we are looking for. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you, and have a nice day.